Welcome friends, in this video, we will analyze whether Xcn coin is bought at this price. Don't forget to subscribe and like, and please watch to the end so you don't miss anything. There is a prominent downtrend curve in the market that has been suppressing price action. For a long time, the price has been moving below this trend line, and although it has touched it many times, it has failed to break it. From a technical analysis point of view, this trend line is an important resistance area and needs to be breached for the price to move upwards. If the price can break above this trend line, it could gain strong bullish momentum and the market could change direction and start its upward movement. Such falling trend lines are often one of the key zones that cause downtrends to continue. As long as the price fails to break above this trend line, investors may remain bearish and cautious about buying. However, a break above the trend line could mean that the selling pressure is weakening and buyers are starting to take control. This could be a strong bullish signal and attract new buyers. However, there needs to be sufficient volume support for this breakout to occur. If a volume breakout occurs, it could indicate that the bullish move is based on more solid fundamentals. Otherwise, a breakout on weak volume may mislead traders, and the price may fall back below the trend line. Therefore, it may not only be enough to break the trend line, but it is also important that the trading volume supports this move. From the point of view of investor psychology, breaking trend lines is one of the important factors that boost confidence in the market and accelerate the bullish movement. This breakout can cause traders to buy more and push the price to higher levels. If the price breaks through this level, it could signal the beginning of a new uptrend in technical analysis and strengthen the chances of reaching higher price targets in the coming period. Also, breaking falling trend lines is often considered as one of the signals that the market is changing direction. When the price breaks above this line, the selling pressure subsides and buyers become stronger. This can give the market a new dynamism and support the start of an uptrend. If the price makes this breakout, it is likely that upward movements will become more frequent in the coming period, and the market will enter a more positive atmosphere. In addition to this, it is also of great importance for the price to persist above this trend line. Because in some cases, even if the price rises above the trend line, it may go back below it and mislead investors. Therefore, if the breakout is solid and the price holds here, the uptrend may continue more strongly. When it breaks above this curve, a long-term trend change may occur. When we take a closer look at the price movements according to the Elliott wave theory, we can clearly see that the first and second waves have been completed. The first wave created a significant rally with a strong wave of buying, then the second wave retraced to a certain level with a correction. In technical analysis, the completion of this retracement is a critical stage because according to Elliott wave principles, the second wave should not fall below the initial level of the first wave. If this condition is met, then the wave count is still valid, and this is a positive development that paves the way for the start of the transition to the third wave. We are currently observing that the market is preparing for the transition to the third wave. In Elliott wave theory, the third wave usually represents the strongest and largest price movement. This wave has the potential to be one of the phases where traders can make the most gains. In technical analysis, the minimum target of the third wave is usually the 1/618 Fibonacci level. According to Elliott wave counting, it is crucial that there is enough volume and momentum for the third wave to materialize. If a breakout to the upside occurs with volume and a strong bullish move, the third wave is more likely to move towards the Fibonacci targets. Typically, third waves occur during periods when buyers are gaining more strength and selling pressure is gradually diminishing. Therefore, if strong buying pressure builds in the current market structure, it is quite possible that the third wave could turn into an even bigger bullish move than expected. In addition, if other technical indicators that support the current price action continue to give positive signals, it will be possible to say that this uptrend is based on solid fundamentals. Also, considering that the general trend in the market is also bullish, it would not be wrong to say that there is a favorable ground for the third wave to reach its targets. If the price continues its upward trend by maintaining the support levels, the probability that this wave will result in a bigger rise will increase, and patience is required. Looking at the RSI indicator from a broader perspective, we can clearly see that it is moving in a strong uptrend. This trend is an important structure that supports price action, and the RSI's ability to maintain this trend line is critical for the continuation of the uptrend. In technical analysis, rising trend lines on the RSI help us understand the overall momentum of the price and the buying power in the market. In particular, if the RSI receives an upward reaction every time it touches the trend line, this is an important signal that the bull market remains strong. We are currently observing the RSI approaching this rising trend line. If the RSI reaches and reacts to this trend, there is a good chance that price action will accelerate upwards in parallel. This would be a positive signal for traders to consider strong buying points. Since rising trend lines are usually the points where price and indicators find support, a new bullish move can be expected to start if the RSI touches them. Also, the RSI bouncing off this trend line would be an important sign that the market has not yet lost its strength and that the uptrend may continue. If the RSI makes a strong reversal once it reaches this trend line and continues its upward movement, this could be a strong indication that the price will react in the same way. In particular, if the RSI turns up from the rising trend line without approaching the oversold zone, it would be a confirmation that the bull market is healthy. In addition, if other indicators that support price action continue to give positive signals, the RSI's reaction from the trend line is likely to be stronger. For example, if the volume indicator starts to rise or the price remains strong at critical support levels, the RSI's reaction from the trend line may be more effective. Therefore, for traders, these levels are critical areas to watch very carefully. RSI and price always move at the same time. When we look at the Bollinger Bands, we can clearly see that the bands are getting narrower and narrower. This kind of narrowing is often an important signal in the markets that the end of periods of low volatility is near, and a major price move is imminent. A tightening of the bands indicates that the price is preparing to make a strong breakout in one direction, and usually these breakouts result in high momentum moves. In technical analysis, the narrowing of the Bollinger Bands is a process called squeeze, and when this process is completed, the price usually moves sharply. Looking specifically at the current position of the Bollinger Bands, we can see that the distance between the bands has narrowed considerably, and the price is moving within a tight zone. This suggests that volatility will soon increase in the market, and the probability of a strong directional move is quite high. When Bollinger Bands narrow, traders usually watch carefully in which direction the bands will break. However, considering the current trend of the price and other technical indicators, the chances of this breakout being to the upside seem quite high. If the price breaks the upper line of the Bollinger Bands strongly, we can expect the bullish momentum to accelerate as volatility increases. In such moves, the volume usually increases as well, adding to the bullish momentum. The narrowing of the Bollinger Bands is an important signal in the markets, often seen ahead of large price movements. Especially when periods of low volatility are prolonged, the price action that follows tends to be much stronger. As of the current outlook, it is possible to say that the price is trapped inside the Bollinger Bands and is preparing for a big move. At this stage, if the price approaches the upper band and makes an upside breakout from there, it will be an important indicator that the bull market will gain strength. Price action following a tightening of the bands is usually short-lived with high momentum, which can present traders with a strong opportunity. Especially if the price continues to stay above the middle line of the Bollinger Bands and moves towards the upper band, the bullish movement can be expected to strengthen further. In conclusion, the Bollinger Bands starting to narrow is a strong signal that the market is preparing for a big move. Since such contractions often result in major breakouts, it stands out as a critical signal that should be carefully followed to determine which direction the price will go in the coming period. As for the outlook, the chances of the price moving to the upside are quite strong, and if the upper level of the bands is broken, we could see a sharp, bullish wave. Therefore, it will be very important to monitor the current squeeze in the Bollinger Bands and how the price reacts. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.